Hello and welcome to today's A-Team Group webinar on new trends and technologies influencing post-trade digitalization. My name's Sarah Underwood. I'm an editor here at A-Team Group and I'll be moderating today's webinar. Our expert speakers today are Brad Bailey, Head of Market Intelligence at Clear Street, Omar Abdullah, I think he'll be able to say that better than I can, perhaps. Associate Director, Digital Transformation at RBC Capital Markets. Omar Ahmed, Product Director at LCH and LSEG Business. And Harpreet Singh, a Global Offering Lead on Post-Trade Solutions at Luxoft. To avoid any confusion, we've agreed that for the purposes of the webinar, we will call Omar Abdul-Jalil, Omar RBC, and Omar Ahmed, Omar LCH. So that's what the RBCs and LCHs are for, just to help us identify who is speaking. Excellent. So I'll ask the speakers to introduce themselves in a moment, but first some helpful info perhaps for you. If you're watching the video, you'll see to the right of your video screen a Slido panel which shows polls and questions. We'll be running 3 polls through the webinar, so if you would like to take part in those, that would be great, so we can see what you're thinking about the topics we'll be talking about. And if you'd like to put some questions to our speakers, please put them there anytime, and we'll ask the questions to the speakers as we go along during the webinar. So plenty and often is fine with the questions. Okay, so enough of me, and back to our speakers. Brad, please introduce yourself and tell us a little bit about your interest here.
Thank you, Sarah. Hi, everybody. My name is Brad Bailey. I'm the head of market intelligence for Clear Street. Clear Street is a fintech offering a capital markets cloud-native platform. We've built out a cloud-native custody, settlement, and clearing system, and our primary first offering is in the prime brokerage space. I come from about 25 years in the industry, working in most parts of a broker-dealer. Look forward to participating. Thank you.
Thank you. Omar RBC, I'm sorry, please pronounce your name nicely.
Absolutely. Thanks, Sarah. Hello, everyone. My name is Omar Abdul-Jalil. You can split that out into 2, but I'm an associate director of strategy and transformation at RBC Capital Markets. My team's mandate is focused on emerging technologies, strategic platforms, so anything that robotic process automation or process reengineering can't solve for would be something my team would look at. And then innovation as this massive bubble, which is essentially finding and developing frameworks to make the digital transformation process repeatable and cyclical.
Thank you. Omar LCH, please.
Hey, thanks, Sarah. So hi, I'm Omar. I work in securities product. I cover data and analytics and business innovation. I've been at LCH now for 6 years. It feels a little bit like a lifetime, but in a good way. Prior to that, I had various roles in the industry. I worked in long-term funding, securitization, liquidity, and portfolio optimization. So I'm fairly new to the digital space, but at the same time, very excited. And I'm here as passionate about change and innovation.
Excellent. Thank you. Thank you. Harpreet.
Hi, everyone. My name is Harpreet Singh, and I run post-trade solutions within DXC Luxoft. So I'm responsible for regulatory, data, liquidity, and operation resilience. Previous to Luxoft, I've headed front-to-back change programs in organizations such as Deutsche Bank, Citigroup, implementing front-to-back complex change programs. I'm looking forward to hear from everyone here. Thank you.
Great. Thank you very much, all. Excellent. So let's get started with an audience poll. And the question is, to what extent has your organization achieved post-trade digitalization? And while you vote on that question, which, as I said, you can see in the Slido panel next to your video, let me come first to Brad to set the scene and share his view on the state of play on post-trade digitalization across capital markets.
Thank you, Sarah. I think we are at a fascinating time in every dimension. If we think about post-trade digitalization, we've gone through and continue to go through an incredibly volatile market, stressing every piece of the value chain. And as such, it's added to the dimension of the importance of thinking about post-trade digitalization. At the same time, we have digital meaning different things to different people, perhaps. We have digital assets entering. And within traditional finance, we have so many tools that are available to be used to make the systems that we have much more effective. And as we think about, the digital post-trade and what it could look like as we move forward from today, there's probably a lot of different pieces. Certain technologies and certain products will have a long tail. What we're going to do with new digital assets and how they'll fit in is an open question. There'll be components of an evolutionary change as well as a revolutionary change, perhaps. But one thing I'll say is we look at the post-trade overall in the capital markets. I don't think that the financial services broadly have the underpinning they should have. We have, much of the post-trade is still very old legacy technologies. We have many, we have COBOL, we have very difficult to change and adjust. So in a way, to get the full picture and a holistic view of front office, middle office, and back office, we really have to think about how do we put these pieces together. And I think most of the things we've seen, even with the cloud, is, okay, we have this new tool, how do we use it? I think, from my position at Clearstream, we've been an interesting point of view because we built this natively. And we have that advantage, whereas we didn't have to integrate on something on top of that we already had. Yet we work with the industry, so we interoperate and integrate with all these different pieces. So I think, just to sum up, the state of the play is really a time of deep thought and great investment into how to make these systems better, scalable, and future-proof to keep up with the incredible demands and the incredible innovation we're seeing across assets.
Okay. Thank you, Omar. You mentioned, I should say Omar LCH, you mentioned that you're sort of coming to this relatively new, you're sort of plunging into it. What are you seeing?
Thanks, Sarah. I think it's a great question to start with. And I guess for me, just to maybe start with defining post-trade, right? Because it just can mean different things to different participants. And broadly, I see it as clearing, settlement, custody, and then there are parts in between. And I'd say the current state of play, I think, just kind of echoing some of Brad's points, the current state of play depends on where participants are in their life cycle. And I've seen that across multiple clients that we work with, and the role that they play in the wider industry. And I kind of put it down to three key areas. One is tokenization. The other one is evolution of the API and data transparency. We're seeing a lot of that. And then new tech and DLT. I think those are really three core areas that are underpinning the industry in the post-trade world. And I'd like to just start by maybe giving a little bit of thoughts onto tokenization. And you can see across the street, there's been a number of initiatives across both cash and securities that have been really successful. They've unlocked liquidities. They have created new markets. And they've really been a beacon in some ways for illiquid products. So really, really positive steps forward. However, what I'd like to just exercise a bit of caution with anything new, right? And especially here, because tokenization as a tool can lead to fractionalization, because you get private networks and you have different nodes on different networks. And then rather than being in a centralized world that we are today, we start now moving to a decentralized world, and that can obviously have its downfalls. And then on the evolution of the API and data transparency, just similar themes. The financial industry has not invested in its systems, and there's been legacy systems, a plethora of user interfaces. There are multiple access points for reporting, accessing data. And I think that the future of APIs and moving data around effectively and timely is really going to be a game changer, especially creating consistency across businesses. And then just lastly, DLT, it's such a hot topic. It's such a buzzword. We certainly are at the early stages of assessing what that means for us and what it means for our clients and our market. But I'd just like to focus on one thing with DLT. DLT is just a technology. The key attribute is always, what problem is it trying to solve? And I think there are problems that can be solved using DLT. There are illiquid markets where DLT will be invaluable to kind of bring them up to speed, where proof of ownership will be immutable. But then there are more mature markets. If we look at equities, we look at FX, and then it's going to be a question of the cost that institutions will have to bear versus the benefit. So I think that value proposition is really important. Sarah, that's my take on the current state of play.
Okay, that's great. Let's see what our audience is thinking. Thank you very much indeed. And coming back to you, Omar, LCH, what does that tell you, that chart? Omar, LCH, would you like to comment on that?
I mean, that's great. So that's saying to me that that banks have already, that our participants are already taking advantage of a lot of the digitalization opportunities that are out there, or at least are starting the journey. So I think it's a great step forward. Okay,
that's great. Obviously, as everybody's mentioned earlier, these different elements mean different things to different people, and that's quite a sort of a very broad brush kind of survey, but we'll go into more detail as we go along. And Harpreet, let me bring you in here to talk about the specific drivers of change for post-trade processes, both mandatory and voluntary. And if mandatory, what are the timelines here?
So I'll continue on the theme that Omar started, problem versus technology. So if you look at the drivers, the problems, I think they haven't changed a whole lot in last decade or so. But how you go about achieving them with the technologies, etc., they have changed. One thing which definitely has come to the forefront is modernization of workforce, and it has come at a time when there is a shortage of talent across the globe, and so organizations, especially post-trade, has to think about how do they look at that particular problem, and now we're looking at things such as flexible work culture, remote working, trying to attract talents in more than one way, especially when they're not working from the offices. And digitalization, I think, plays a big role in terms of collaborative tools and how you communicate with them, etc. So that's I think a new sort of theme or more recent. Then other than that, we always had within post-trade, reduction of technical debt because of what was happening in front office, and folks in post-trade had to bear some brunt of it. Client experience, post-trade still has to provide a differentiated client experience, digital experience, various channels, etc. Intelligent analytics are helping with that, but the theme has always been there. Post-trade still has to enable revenue growth, and they still have to make sure they're compliant and are doing it in a controlled way. And things that Omar was mentioning, such as DLT, could play a role there as well, or are playing a role there as well. Now the question which one of them is mandatory is a bit of red herring, because if you are not doing them now, then probably you're not competitive. Obviously, you have to comply with the regulatory dates, but others are as important because they make you competitive.
Okay, fine. Thank you. Omar, RBC, as a practitioner, what do you add there in terms of the challenges?
Yeah, I won't add too much. I'd say, there are a number of regulatory initiatives that drive a more reactive approach to change, especially through ensuring that, organizations can remain compliant. I'd say the biggest regulatory initiative in terms of the change effort is move to a T+1 settlement cycle. Now, anecdotally, I heard that there were a few speakers at the SIFMA conference in Phoenix earlier this summer. They claim that the industry can even move to a T+0 cycle, which was obviously met with groans and face bombs from investment operations professionals in the room, because finding your T+1 playbook and just blowing the dust off won't be too helpful, especially for the North American firms, for a variety of reasons. But the aim there is to be compliant by Q1 2024. On a more proactive basis, there's persistent margin pressures, there's demands of a more effortless client experience through self-service, and an increased difficulty to differentiate from competition. All that coupled with this downward push from organizations in the front office to lower costs, they're all key drivers to technology-driven change.
Excellent. Let me ask our audience then, and another poll question. What are the challenges of implementing post-trade digitalization at your organization? Let's see what they have to say. And while they're voting, if I may, let me come back to Omar RBC to hear his views on how you begin to the challenge of drivers for change in the back office particularly.
Yeah, it's a good question. I'd say there's a number of headwinds impacting service delivery, especially when you look at post-trade processes through these changes that I mentioned. One is organizations still have extensive manual processing, and that results in obviously inefficiencies and operational risk. It seems most organizations have moved towards digitalization, which is fantastic, but they're not all the way there, and they haven't achieved, full SDP. The Great Resignation, I know Harpreet touched on this, but this has caused high talent attrition and a loss of very valuable domain and enterprise knowledge. And it's not just a matter of hiring more people and expecting those people to fill the gaps. There's obviously a lot of time needed in terms of making sure that those gaps in terms of domain knowledge can be filled. We touched on volumes, and I think Brad mentioned volatility as well, and that's causing a strain on a number of back office teams across many organizations from what I've been hearing, especially the ones that don't have appropriate procedures and infrastructure in place. From a technology perspective, obviously there's a lot of legacy infrastructure, especially within organizations that have existed for many, many decades. And that vast technology state now becomes expensive and a bit clunky, especially with how rapidly the technology innovation has been moving across the last few years. I'd say historically technology solutions have been built out to be more product or process or even region specific, and that's resulted in a massive technical debt and increased costs, which obviously constrains organizations' ability to scale.
Okay, thank you. Omar, LCH, what would you say there in terms of the challenges of the drivers for change?
I think it's a really good question. I'm going to take a slightly different slant on it, which I think the back office generally, do face the brunt of non-timely information or lack of data or lack of information. They really are, right, unfortunately, at the bottom of the pile, dealing with the day-to-day problems, and with a lack of funding, with a lack of oversight, sometimes it becomes challenging. And I like to focus on one example, just because I love little micro examples, and that's settlement fails in the post-trade world. So if we look at the repo market as a cornerstone of financing, and it's key to the post-trade world. And if we look at ICMA have said that the repo market fails between 3 to 5%. And that European repo market is something like 8.3 trillion. And that's 250 billion of fails. And why am I throwing these numbers out there? If the back office can look at this and say, hey, look, I've got all these problems that I'm dealing with, I've got these challenges, but if I can start partnering with innovative solutions, whether that's technology-based, whether that's business-based, these challenges in some ways can be turned into opportunities. Now, I know that might be looking at it through rose-tinted glasses, but I think sometimes we got to look beyond, and we got to look for the opportunities in the challenges. That's me. Thanks, Sarah.
Okay, thank you. It goes back to what I think it was Harpreet who said, you have to get revenue out of the back office as well as the front office. It's an important place to be. Let's see the challenges that our audience are facing. Okay, Omar RBC, would you like to comment on those results?
Yeah, I'm not surprised in terms of, especially obviously legacy systems, especially from organizations that have been around for many, many years. And yeah, I know Harpreet touched on skill sets and attrition. Obviously, we're trying to move incredibly quickly and trying to scale, but we're competing not just with other financial institutions, but also technology companies and many other industries. These are very transferable skills, and we need to find creative ways of encouraging and attracting talent.
Okay, fine. That's great. Thank you very much. And coming back to Omar LCH, please talk about how these challenges can be approached and resolved.
Yeah, so really good question. I think for me, it's having the right operating model in place. If you've got an operating model where tech operations, the business, whether that's front office or an actual business function, and the middle office functions have a forum where the common issues can be broadcasted, can be challenged, can be discussed. I think that right operating model in place is absolutely key. I know, having worked in investment banking for years, that is there. I think we just need to do more of that. I think that the role of the CTO is an important one, and about roles and responsibilities. If the CTO comes in and says, hey, I want to re-platform entirely using a blockchain or a DLT, but that doesn't fit in with the business drivers, who makes that decision? Where is that strategy being defined? And sometimes, you see it across the street all the time. There are multiple different strategies that banks are working on and other buy-side firms are working on. Some are offensive strategies, opening new markets, attracting new clients. And what does that need? Does that need a DLT? Does that need something different? Or is it a defensive strategy? And all of that really, just to me, is making sure that you get the right roles and responsibilities, the right infrastructure in place within an organization, and the right operating model. And if you can get that, then in some ways it can help resolve some of these challenges.
Okay. Coming back to Omar, RBC, a practitioner, how would you look to resolve these kinds of problems?
Yeah, I mean, all of these challenges impact the majority, if not all, of the players in the market, including RBC Capital Markets. And for us, at least at RBC, in order to drive our business strategy, we've identified some key themes that will definitely underpin our transformation across all of our use cases. Obviously, we're focused on maximizing and client value and giving the client as best of an experience as possible. And so we're focused on three themes. One is to accelerate process automation and digitization. And this would involve, similar to what Omar was saying, re-engineering our operating models, maybe limiting some of our handover steps and our manual processes along the way, as well as digitizing our key services. I agree with Omar in terms of DLT and other emerging technologies are huge, but I would say maybe a step before that is we're looking at putting some investment in terms of consolidating some of our platforms and making our tech stack a lot simpler to manage. But we're also modernizing our capabilities to support the front office through DLT and other solutions as well. Finally, we're also looking to link our data throughout the transaction lifecycle and then strengthen that data by ensuring completeness, accuracy, and availability, so we can leverage it through enabling analytics and then better decisioning and reporting for our leaders.
Thank you, Omar, which brings us to the front office, really. And let me bring you back in, Brad, to talk a little bit about the role of the front office in the digitalization of the back office.
I think many of the points tie into this, but when we look at the poll results, I would say when I look at the industry, across different asset classes, I do see tremendous data silos. I see tremendous technology silos. I see very different workflows and processes across different products. And I guess when you think about the front office, I mean, if we lived in a theoretically ideal world, firms would have, each time they added a new product, they wouldn't stuff that into, a system where it seemed to fit, for cash flows or whatever it may be, but they would have replatformed, or they wouldn't just hire more and more people, which ends up with very, manual processes. But I think the front office, some of the things that we've seen in recent years are, one, due to regulation, due to changes in products, is the back and the middle office moving forward. So, firms that have really been good about thinking about their risk or about how they're putting on positions can really optimize their collateral or optimize their margin, things that were not really thought about at the moment of the trade historically. And if we think about what does it mean to do that, if you're doing it in, whether it's in equities or across asset classes or fixed income or even in digital, I'll come to that in a moment. But it's what data does the firms have? And we see competitors that really have done this right and can get a better sense of their risk and price faster. So overarchingly, the front office drives this, the products that come in. But I think what we're seeing and this is maybe represented in the poll results more, aspirationally, like, how do we do this more holistically? How do we think about a product and its process and its workflow over the life of that product? And when we see all the capital that's trapped and all the margin cost and all the things that we could really cut by, the things we're doing, it's like going into T+1, as Omar from RBC was discussing. I think these type of moves are crucial, but there's so much more. And we have what's confounding to some degree is we have these tools, but it's really hard just to rip out 40 years of technology, this archaeological dig that exists as you go down through languages and technologies and get rid of that. So, but like, if you're starting fresh, you say, okay, how do we do it now? And you think about, wow, look at the data growth across products. Look at how even more traditional fundamental types of asset managers and investment firms are using data in a way that just a few years ago, only quantitative firms would use. And to get all this to tie together, you really have to have the right connectivity, the right access, and bring that in. And I really think that the point right now, as the front office digitizes, is how to do this. And the last point I'll make is if you look at native digital firms, and let's maybe separate the process of DLT or blockchain as an infrastructure from some of the crypto firms, some of the things they've done are really interesting from a technology point of view. They haven't had the same regulatory burdens so they've de-siloed naturally and natively the custody, the trading, the custody, the settlement. And it's really something to look at and think about for traditional finance as we move forward.
Okay, thank you. Harpreet, coming back to you, and what do you see here in terms of the relationship between the back office and the front office, and how important is it for digitalization in the back office?
So I think Brad touched upon this. Regulations are pushing front office to own their data. So they need to own whatever front office data is paid. If it's a trading system, then they need to own trading or sales data. And this is not, I know post-trade community has been saying this for years, but regulators are also moving towards that direction. Now when that is done, and if the data which is received is accurate, is complete, is timely, then the post-trade, and in the past, this is what has happened, do not have to build this patchwork of solution which is compensating for the lack of data quality. And then it helps post-trade become more standardized and cost effective. And then everything we spoke about, for example, we spoke about differentiated client experience, and it helps front office. It's their goal as well, or revenue growth is their goal. So they are as much, I think they have as much skin in the game as post-trade. And so they're not only the sponsor, they're partner, and it's their project as well. So that's how I see the role sort of evolving. We're not there yet, but that's where I think it is going to go.
Okay, that's great. Back to you, Omar RBC, if I may ask you, how can the practitioners in the back office win buy-in and budget for post-trade digitalization?
Yeah, so the main selling point for our team at RBC has been to make our stakeholders aware of the urgency to modernize our systems, our processes, and technologies. The next, the next 5 years are going to be more disruptive than the last 15 as we continue to see the rise of unicorn fintechs, technology conglomerates expanding into financial services, and regulatory bodies pushing organizations to be faster, quicker, and more transparent. Developing an attractive business case sometimes feels like it's more of an art than science. But as long as we can justify how the post-trade transformation leads to an improved client experience, reduction in total cost takeout, increased productivity, improved client experience, improved time to market, and or a risk reduction, then you're in a good state. Sometimes, and at least what we've been recently doing is when the back office keeps screaming, the sky is falling, it just falls on deaf ears at this point. So what we're trying to kind of leverage is finding front to back synergies, because that's more likely to gain key leadership buy-in.
Okay, thank you. Brad, what would you add there in terms of winning buy-in?
No, absolutely. Great points, Omar. Well, I guess if I go back before I joined ClearStreet last year, right before I was in the consulting analyst role, and this is I saw nothing but challenges in terms of trying to get buy-in to do this. I think there's a realization, and one thing, whatever happens moving forward, one of the things that the last 7 years or so thinking about blockchain and DLT is it really had a lot of executives and senior people, from different, business lines, from trading, from executive office, finance, thinking about this process and made them think about, well, what do we have now? And I think that was a very important exercise in terms of like, wow, why do we do things a certain way? And I think Omar made this point, but really that sense of urgency, which I don't think, that's evident by, we've seen over the last 36 months, we've definitely seen systems, antiquated systems, legacy systems fall down in the volatility and volumes. And that's unacceptable. We can't run the markets. And we always have to think about the scale, because even as we come out of this period, you just see new strategies, new ways of trading that are always going to make it more difficult to do this. So I think there's a recognition in this holistic thinking to really think about digitizing post-trade, to use scalability. When you think about some of the risk models that people are running, how long they take, if you can do that, if you can scale up and for instance, in the cloud, you can really, change the way you do your business. And I think that's what people are going to have to do, especially as you see certain trends go forward. And that's, new products from digital assets, but more and more cross trading, cross margining, and everyone's looking for tremendous efficiency. So this really is a firm-wide thing for people to think about. It's not a front, back, and middle office thing. It's just, we need to do this to be as effective as possible.
Okay, thank you very much. And let's take a break of some audience question. And I think I'm going to ask this first one to Omar RBC. As he probably has had this experience himself. It says, our post-trade processes are stretched to the limit and we need to update them. But where can we start the journey without causing disruption?
It's a good question because it's something we're also facing now. Obviously, our teams are stretched thin. I'd say it'll be difficult to go up to leaders and say we're only going to focus on one problem at a time. I don't think that's ever going to be realistic. For us, and my advice would be if you don't have the right metrics and data available, that is probably point number one. Find a way to include workflow solutions or orchestration solutions just to continue gathering that data, because at the end of the day, you need your leaders to make decisions based on data, even if it's descriptive and it's looking backwards, because the alternative is to rely on anecdotes and seniority and intuition, which I don't think anyone really wants. But after that, it's I'd say trust your people. Especially if you're part of a larger organization, trust your people to take on some side quests and do research. Don't just leave that responsibility on a handful of your leaders, because you can only move as quickly as the slowest person in that group. Whereas if you give people, a chance to kind of explore and then find new solutions out there, we've done that through idea management platforms rather than just rely on Excel sheets and people just submitting ideas to their leaders. So that would be my response. But obviously, automation and finding ways of simplifying your processes and thinking about the client experience as well, that's also more likely to gain some leadership buy-in.
Okay, great. Thank you. Harpreet, this one is for you. It doesn't say so. I say so. It says, you talk about involvement of the front office in back office digitalization. How can you pin this down and make it useful? Obviously, we've talked about the harmonization and so on, but how do you actually make sure that this is actually happening and it's just not a talk the talk kind of thing?
So with our tier one clients, let's say too big to fail, this is more focus area, because regulators are looking at them, they are auditing them. Somebody is going through some kind of penalties and fines. So this is already happening, and the way they are doing that is they're saying, instead of calling it, and I'm just making up a little bit an example, equities business, it's an equities data. This is a fixed income or a rates data, and this is a credit data. And then they're looking at the data front to back. So far the post-trade space has been more horizontal, but when you start looking at this problem in a vertical way, then you put the ownership a little bit back, because equities business owns equities data, and that is happening at some of the tier ones. And like I was saying, I think you will see that this will also happen at tier 2 and tier 3. Right? Obviously, right now the focus of regulators has always been a little bit more on some of those biggest ones. I believe I answered the question. Did I answer the question? Was that the question?
Yep, I think so. Thank you. And Omar, LCH, one for you here. Here we go. What are the pros and cons of outsourcing post-trade processing?
Oh, that's a difficult one. I can definitely see arguments for both, actually. So I think, let me start with the pros. I think moving some of the processes that you have that are post-trade into a business that is an SME in that area, I think can have huge advantages. It not only reduces costs, it reduces regulatory burdens, but it also means that you can benefit from efficiencies later on down the line, because you've got an SME dealing with the particular angle. I guess the downside or the cons of doing that is that there's always going to be a transitory period in between, and how will then that impact the rest of the infrastructure that is already there? So by picking yourself up and moving it elsewhere, does that create any other inadvertent risks that effectively it opens up? So I kind of hope that answers the question very broadly.
Yep, I think so on a broad basis. Absolutely. Thank you. And Brad, one for you. It's not quite entirely along the lines of what we're talking about, but it does come back to the issue of things like cloud. It asks, we're finding that it's difficult to get decision makers to consider alternative delivery solutions to complete digital projects. Any suggestions?
Yeah, look, it's very firm specific. I mean, I could say that, we at Clear Street as a fintech, we've had, we have a different path than the banks who, built up over years and acquisitions. I think that where the success that we've seen is, people like, for instance, in using cloud, that goes quite a ways. And the firms that, outside of Clear Street, in financial firms that have like experiment and try to figure out how to use that effectively, but moreover, how they would think about that, what it means from an operating, from a model, from a process model, and from a technology model, and then piecemeal wise doing that, but that takes time. We've seen a lot of competitors try these projects, a lot of firms try these projects, and really it's a very different way to thinking about, and then you often just build on top of a legacy foundation. So I think in order to make the case, if that's the final thing, is, how do we, you just have to say, look, this is existential. We have to do this right. Look at the data. Look at the data on the data that the capital markets puts out. So I think that can be a helpful point.
Okay, that's great. Thank you all very much for your questions from our audience, and thank you to our speakers for their answers. And back to my questions, and back to you, Brad. We've touched on skill sets earlier in our conversation, but what are the sort of specific skill sets that are required for post-trade digitalization, and how best can they be sourced? Do you need to go out of your company, or is it an in-house training operation?
Well, I think that, there's a couple ways to look at this. One, I'll talk about, if we're looking at sourcing talent, it's been hard. I think Clear Street as a fintech unicorn has an advantage. We've gotten a lot of really, incredible engineering and development talent. And I think how you use that talent is key to make sure they're content. And we've come up with, just to speak about our firm, we've come up with a system of putting together developers, business, operations, compliance into different pods and developing there. So you really have a very strong, I think having an environment where people are very excited about the work and understand what they're doing and can work with, you have people coming right out of college as coders, working with people that, battle hardened operational professionals of 30, 40 years. And I think those type of things are for the financial firms overall, it is really so competitive to get the talent we want. Mm-hmm. So I think that you really have to make it as exciting as possible and offer that, look, we are an inflection point in the back office. We're an inflection point in digitalization across front to back, and be part of that is certainly an exciting opportunity for many people.
Okay. Omar, RBC, what would you say in terms of the specific skills and where you can get them from?
Yeah, it's a good question. I'd say it really depends on what gap needs to be closed, and this is going to vary from firm to firm. So I'll just give my perspective on what we're doing at RBC. Our team within the strategy and transformation group, we work with our IT delivery partners, we work with BAs and PMs and the operations subject matter experts. And so we kind of sit on top of that with that oversight to ensure that we can fully envision what RBC wants to be when it grows up in 3 to 5 years, or even 7 to 10 years. What I would say is our strategy and transformation team, we usually look for candidates who have different capabilities, but at a bare minimum, they must have these two soft and hard skills. In terms of soft skills, we either hire or upskill people on the team who have critical thinking. It's a bit of a no-brainer, but we're dealing with teams who are comfortable with the status quo. So we need to find ways of respectfully challenging these people to think beyond the BAU. So that itself is a skill that's needed on a daily basis. Storytelling and salesmanship through business cases and strategy decks is absolutely critical. So a lot of people mentioned, whether through questions or some of the speakers, it's difficult to obtain stakeholder buy-in or even just the delivery models. I think that was one of the questions as well. So I think knowing how to tell the story and knowing what your audience is looking for and the different communication styles needed is definitely a critical soft skill we look for. When looking at some of the harder skills, having technical fluency is needed. It's for crucial partnership between operations and IT, where we sit in the middle. That's critical. Obviously, we need to educate the non-technical savvy folks on what technologies like robotic process automation or AI or DLT can and can't do, but also working and challenging our technology partners to think beyond just delivering on a solution that is an enhancement, and rather let's try to think strategically and how does this solution ultimately fit into a client journey. Finally, I'd say having some solution implementation or deliveries is absolutely critical. So if we can't upskill people within our group to have some more experience there, we tend to hire, but we can't afford to slip up through common pitfalls when implementing a solution, especially when we're looking at post-trade processes, because you're selling the solution for 6 months, and so you don't want to lose that credibility because it becomes twice as hard to rebuild.
Okay, thank you for that. And Omar, LCH, coming back to you, if you've managed to do all these things and looking even beyond compliance, what benefits can firms gain from post-trade digitalization? Obviously, it's quite a long journey.
Yeah, it's a great question, actually. And I think just echoing some of the speakers already, I think there are huge efficiencies to be made. There are huge efficiencies, whether that be from a P&L point of view, whether that be a balance sheet perspective or a capital perspective. So I'll take some examples. We look at, for example, the swap market. 94% of the overall interest rate swap market is cleared at LCH. That's 3.5 trillion of notional volumes per day. Repo market is circa 237 trillion in notional cleared last year. And the equity markets in general has just huge volatility. Why am I providing all these stats and figures? the reason why I'm saying it is because the volume is there. It's absolutely huge. And they're all Delta One products, which can be optimized. And I think going back to what Omar RBC was saying is that it's that storytelling, that use case. If these numbers are there, digitalization can help optimize portfolios, can help reduce your initial margin exposures, can help reduce your PVO1. And that balance sheet that's unlocked, or that P&L that's unlocked, could be utilized elsewhere. So it kind of builds on. So I think there's the benefits, not just from a P&L perspective, but a balance sheet perspective, I think is ever present just through digitalization. It's about getting that story right. It's about understanding the real value that can be gained from this strategy. So I think that, in a nutshell, I think you got to digitize to optimize. That's kind of how I see it.
Okay, thank you. Brad, what would you add there in terms of benefits beyond compliance?
Well, Omar LCH said a lot of great things. I mean, the benefits beyond compliance are tremendous. I mean, cost down, risk down, internal and external stakeholders and client satisfaction up, P&L up. I mean, there's to the point, if you take all the numbers that Omar was putting together, I mean, there's trillions of dollars trapped in the system, and it just takes the fraction of a basis point here and there to make big differences. And we are seeing that. And I think the compliance needs this, legal needs this, but the operations needs this, but the business and the clients that we all serve, wherever they are, or whatever type of clients, need this. I mean, from central bankers to retail investors, everyone's going to benefit if they can do what they want, if they have the access, if they have lower risk, lower costs, and they know that the system is working well. We've seen a lot of choke points, and they do often go back to, poor data or inaccessible data. These type of things just have to be solved, and it's like you're solving them as the problem keeps getting harder. You're trying to optimize as data growth keeps expanding, as products keep coming, and as we fit in, in the digital theme, as we fit in whatever it may look like, crypto and DLT and blockchain, there's going to be a long tail in these different parts, and there's going to be different firms that need different things. So we're really at a time where people have to think, okay, how are we going to integrate all this together and make it as effective as possible? And I think the industry will benefit. So it's incumbent on everyone to be thinking like this.
Okay, that's very encouraging. Thank you both. And I think we just have time for one last audience poll. Can we see that, or can the audience see that at least? And while you do that, and you can again tick as many of the boxes as you like, let me come back to Harpreet to talk about technologies, tools, services, and solutions that are helpful here.
Mute. So if I can divide that into two parts. So the technologies, solutions that are already helping. Cloud, for example, is already helping, because then it becomes basis or foundation for other technologies such as AI, ML, in tools, standardization, scalability. That's data standards. We have had data standards for quite some time, and we're using them more, especially because of how regulation is pushing us, which then helps with API integration that somebody had touched upon before. And then I think automation is happening, not necessarily just robotic. It could be, DevOps automation, or it could be just process automation in general. So these tools are also, or services are already being used. And what will be used or still has scope to have more sort of usage is data analytics, AI, and I think there will be more of that. So in post-trade, in order to make decisions, and DLT, everybody spoke about it. I think we'll see that more. And there are a few other technologies which are a little bit more out there, but I think you'll see them a bit more used.
Okay, fine. Omar, LCH, what would you see there and say there in terms of useful technologies and so on?
I don't really have much to add, really. I think Harpreet covered it really nicely. But just a kind of brief overview. I think I think the technologies that firms are going to adopt, I think, is idiosyncratic based on their needs. So if they're taking a cloud-first approach and they're using AWS or Azure or whatever it may be, I think that's dependent on their needs and the strategy that they take. But I think the tools and services are going to be really important. And again, dependent on where the firm is in their tech lifecycle, an adoption of an API-first strategy is going to be huge, especially large organizations. Having worked in investment banks, many years ago, I'd always find getting data was challenging, and that's the first part. But getting data that's accurate, timely, and consistent within an organization was always challenging. So I think adopting that API-first strategy with the right analytics, I think is not just going to be helpful. I think is going to be part of the foundation for the future of our digital economy. Thank you.
Okay, could we have a quick look at what our audience is thinking here? Well, cloud, yes. Machine learning, DLT, RPA, artificial intelligence, all the things I think the Harpreet that you mentioned. Harpreet, does that look about right to you?
Yeah, absolutely. I'm not surprised.
Okay, that's great. Okay, well, coming to our final item, I'd like to ask all our speakers for their advice for practitioners working on post-trade digitalization. And again, Harpreet, coming back to you, would you like to start here?
Okay, I'll say, so post-trade is about standardization. It's about making sure that we can do things in a very cost-effective manner. So if it is not bringing competitive edge, do not reinvent the wheel. Look at whether you can buy something rather than building it yourself, especially if it is standardized. If it is not standardized, that's my second advice, then try and standardize it. I know it's a little bit, it takes effort. And then third thing is collaborate, like things like forums like this speak. And what I'm hearing, everybody's really facing same issues in post-trade. So collaborate in forums like this and others in the industry. I think so. Those would be my three advice.
Okay, thank you very much. And Omar, LCH, what advice do you have for our audience?
I guess 3 seems to be the magic number of this panel. I'd say, know the value proposition. I'm really going to look at it from a business perspective. I think that can be applied across the board, and really know your current processes. So if you know your value proposition and you know your current processes, then understanding the delta between the two, I think will be really important when presenting to the next point, which is your audience. Know your audience and the culture within your firm. What kind of culture is there? So when proposing those solutions and ideas, if it is a tech-heavy, a digital-heavy firm, you don't need to really sell these ideas. But if it isn't, then it's about education. It's about making them understand how those processes work, what's the benefit, what clients are doing, what the street is doing. And lastly, I'd say, digitalization is inevitable. And, I think the poll question kind of answered it, where they said 75% have already either got or in the process of building their digitalization strategy. But for me, I think it's really important, the last one, is to focus on those incremental changes that can actually be delivered. Because what I sometimes tend to see is that people try to go for boiling the ocean. And when you try to do that, it holds back progress. So maybe those small incremental steps can really add value.
Okay, that's great. Thank you. And coming to you, Omar, RBC.
Absolutely. So the pieces of advice I would give are honestly lessons learned that our team has learned through some challenging but very fruitful moments. So number one is obviously when looking for leader buy-in and support from your peers and other leaders, you kind of want to think like a politician and do some lobbying. But for the most part, especially when looking at new technologies, you have to think like a scientist. Pick the best solutions for the short, medium, and long-term needs of your organization. Drive a rapid experimentation culture within your department or at least your own team, and develop or at least adopt frameworks to deliver value in an accelerated pace. So that would be number one. Number two, and I mentioned it before, but when we look at transformation, we always look at people, process, and technology, which is still the case, but data is foundational to all of that, and it's foundational to any digitization effort. So find ways of leveraging it to create the metrics and KPIs you need to better understand where you are today and use it to adapt and be nimble. If you can't measure it, you can't manage it. The last thing, and I've mentioned this before, is leverage your employees in the process. Don't over rely on a few leaders within a small space to identify opportunities to improve. They'll be valuable for their expertise, but don't heavily rely on those folks. Include people that are more boots on the ground to find even small, non-sexy solutions, and incentivize your staff to start taking on side quests for the sake of innovation.
Okay, that's great. And Brad, a few last words from you, please.
Well, in many ways, I'll be summing up some of the brilliant thoughts I've heard already, that we've all heard. So for my 3 pieces of advice, one is think small and think big. In other words, think about the detailed problem, but think about what it's going to mean, and try to avoid building technical debt, and also never look at that particular problem in a vacuum. Also, the next number 2 would be think long term, and it ties into what I just said in terms of how is this going to impact me, my firm, our clients, and how is this going to look as it scales over time. And then the last point is to the cultural. It's really putting together the right team of technologists, operational professional, business line, whether that's trading or whatever it may be, but bringing them into the room to really kind of think about the state today and tomorrow. And if anyone's interested, I wrote a blog, Clear Street wrote a blog about the challenges and opportunity in post-trade, and you could see that, and we talked about a lot of these points, and that's on our website. But I thank everyone. It was a lot of great points.
Okay, thank you. And thank you to all our speakers for sharing their expertise with us today. Thank you too to Luxoft and LCH and LSEG Business for sponsoring today's webinar. Just before we close, a few A-Team Group webinars that are coming up that you might want to register for. If you scroll down your screen, you can actually see them and click on them and register just right away. But they cover meeting the challenges of regulatory change, how to make outsourced infrastructure work for trading, and the challenges and potential of data marketplaces, all things that are pretty hot in our markets at the moment. That said, that's it for today. So thank you again to Brad, Omar, and Harpreet, and thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear your views and improve our products. Meantime, thanks again and goodbye.